Hello everybody, John Hutchinson with a quick end of day Wednesday, January 5th update to our Mars stock selections for this week. Happy New Year. I am finally back from my 2.5 weeks of travel, so I'm going to try to be a little more active to help everyone out as we start the new year fresh, or relatively fresh anyway. We're going to go through all of the open positions, including the two new selections which would have executed today, and just take a quick look at each of them and give you some ideas on things you can do if there are things to be done. So I want to start with Andersons, which is one of our longer holds right now, and we've been doing fine with Anderson as it kind of ran up to the high 40s here, high 45s, but obviously we've slid back, and a gap down move today, putting us really back at entry. I mean, today's closing price would be 2 cents above the original entry price of 42.71. Not a great sign, but not unheard of. If you look back here, Anderson in early November, Anderson's made a strong move up and then retraced almost back to the start of that move before making another move up, moving sideways, and then making another move up. So if you didn't have an opportunity to move your stop loss to break even, which would have been somewhere right at the top of the bars open today, you're still sitting with a stop loss right around where this white line is. And I want to draw your attention to the moving averages. It's not necessarily a predictor, but it's just at the moment it's something to watch. But you'll notice that the 50-day moving average has now reached or met, if you will, the 200-day moving average. Generally, that's a fairly good sign. It just shows strength in the stock. But Anderson's was hit with a single, and I do mean single, downgrade by, I think it was BB&T today. So we may have seen some sell-off because of the downgrade. We may have seen some profit taking from the recent run-up. There was no specific or significant negative news. I mean, a downgrade from buy to hold is not significant. It's just a downgrade. But nevertheless, we did give back from this point, the high of 45.67, down to where we are now. Never like to see us do that, but at the moment, if you're still sitting with your 5% stop loss, keep it there. If we get some rebound to cover back into this gap, I would again stress trying to get your stop loss to break even, which should be somewhere around 42.81, depending upon where you entered on this one. But if we can get a little more momentum in this stock, breaking that 200-day moving average might be a predictor for, not a predictor, but might give us a little more momentum to get this one back into the 4 to 8% range and hopefully get us all out with a profit. Moving on to PTRY, I'm not going to draw a whole lot on this chart. Again, a couple of sell-off days. This is effectively a sell side candle. When it's filled green like that, it means the close was lower than the open, and when it's open, it means the close was higher than the open. So we opened here and closed here yesterday and did the same thing here today. What worries me a little bit about this is the recent ascending channel that PTR had been building, and it closed outside the channel. It's still about 30 cents, about 36 cents above our open entry price from December 21, so it's not in a losing position, but it had been moving along nicely and was getting us up toward our 8% profit target before pulling back today. I would watch this tomorrow and look at it again at the end of the day. If it comes back in a little bit or continues this pullback, I might look again, get a stop loss up to break even, and be ready to trade with new money next week. And the main reason I want you to consider working hard with that break-even stop is not to prevent, well, it is to prevent potentially losing trades, but again, I don't trust this rally in the S&P 500 that started yesterday and kind of carried through today. I mean, here's today. It finishes at the top. Let's scroll in real tight. That's a dragonfly doji. That's an indecisive market. You can see that the market did not finish at the top yesterday. You know, there was a big rally and then a sell-off. And Europe again raising itself in the news. So I'm not convinced just that we have a lot of momentum going into the new year. So I want you to learn how to protect yourself by eliminating potential losses whenever possible. Remember, the worst thing that happens is you get out of a trade by recovering your trading cost and getting out and being ready to trade with essentially the same money. It can have a very positive effect on your portfolio returns for the month if you have break-even trades rather than losses, simply because you're preserving even more capital. Remember too that the 5% stop loss is a very small percentage of your total portfolio, so even if you have a loss, it's not a big loss. It just, you get out of the way quickly of a stock that can back up and continue backing up, and that's what we don't want to see happen. So as it relates to PTRY, again, a loss of strength, breaking outside of that channel. I'd like to see what it does tomorrow and see if it can recapture some of this. But if not, I'd get my stop up to break even wherever that is, so that between both Andersons and PTRY, you can do no worse than a break even. And I may start actually tracking some of these in our results as well, just so you can see the impact that it can have on your total return for the month. So moving on to Expedia, here's another one. Strange day with Expedia, big sell-off and then a buyback. So although it finished down for the day, you can see this line was recent resistance from here, and across here, and then when it broke through, it's pulled back in, but it's still holding above resistance. Even though we're in a losing position on this, there isn't anything we can do about that at the moment. Obviously, there's no break-even strategy when we're down about 2% or 2.5%. So hold steady on Expedia, but be prepared that this one will probably continue. Was hoping that this was a little, not a negative candlestick. Obviously, we'd had a gap up and a recovery, but it didn't hold, and a sell-off today again. But let's see what happens tomorrow or Friday, and hopefully we can get at least back close to a break even on this one. If it's not going to turn around and get, I mean, here's, big momentum push, pull back, big momentum push, pull back. If we get that next momentum push, great. If not, let's be prepared to exit that one and move on. And then here are the current trades that were just recommended. We had a nice day in MHS. As you can see, as I talked about in the email, we needed to break above. I'm sorry, I missed Marathon Oil. I'll go back and get that one in a second. We needed to break above this line, as I talked about, the low 58s being resistance, and if we could, what you'll see as I back out, so there's, this is the August sell-off. So there's not a whole lot of resistance in terms of price acceleration here. So what I'm hoping is that we'll see, a continued trend pushing us up into the low 60s, which would be enough to get our 8% and get out and move on. But a nice day. This stock is already going to be up for most people about 1.5% today. Hopefully we don't keep that momentum going into tomorrow and Friday. We shall see. Super Value, the other selection, not much happening on that one. If we tighten in here, just a quiet day, really. It did push down, but came back and closed at the top. Formed a little bit of an inside day. Sometimes that can be helpful, but it's also a sell side inside day, so that doesn't tell us enough. Considering it's at the top of yesterday's price action. An inside day, for those who don't understand, is a candlestick whose body is fully inside the previous candlestick's body. And you can see that this body, the red body, is inside the green body. Typically, depending on where the candlesticks fall, an inside day can mean strength or weakness. So a downside inside day can tell you that a stock is going to fall. A top side can sometimes tell you that a stock is actually going to go up. But either way, if you got in at the open, you were in at 8.45, so you're off 3 cents. Less than 0.5% for one day. I'm not too worried about that. We'll see what it does for the rest of the week, as with everything else. But I just want you to get a quick view of what happened with the stocks today. Let's take a quick look at Marathon Oil, which again, as I said, this stock tends to get hot. And it's a great stock if you trade frequently enough and you can get in tune with a chart. Marathon is one to watch because when it takes off, as you can see here, back in October, it made a huge run-up nearly doubling, really, not quite, about 70% rise from 18.90 all the way up to nearly $30 there. Pulled back, went up, pulled back, went up, pulled back, and now we're in the middle of, well, I would expect to be in the middle of another run on Marathon. But you can see from where we entered here on December 28th, we are moving in the right direction. So at a little almost $2 up on that stock, we're moving along fine. We should be at about 6% gain on that. This is a good candlestick to finish the day with, and held yesterday's push gap up rally. So let's hope she is in the running for one of these types of little momentum swings. But again, if you trade frequently, keep your eye on Marathon. It's a great stock to swing trade because it's volatile enough without being extremely volatile that you can capture these quick moves up and down, whether you're long or short. So that's the quick update. Again, not a whole lot. Keep your eye on Europe. The big news from this morning had to do with bank deposits, which means banks in Europe aren't lending to one another. Great. But yesterday's economic news on the U.S. front really, I think, helped to propel the markets at the start of the new year. We'll see how that continues. But again, I remain cautious in the sense that I think we're going to continue to see ups and downs in this market. So what I want you to learn to do is to set that break-even stop loss anytime you get a stock up 4%. Again, when a stock has reached 4%, move that stop loss to break even, and don't be afraid to take a break even exit. You're not hurting yourself. You're preserving more capital. You're recovering your trading cost. So if you haven't studied that one in the 8 to 5 rules, please make sure that you do. If you have questions, as always, you can send them to me at service@tradersreserve.com, and I'll make sure to get an answer to you to help you. That's the 12-minute update. I will see you again, if not this weekend, then early next week with another video update if necessary. But hope everyone is in on at least MHS. I really think this one is going to do well. It's up above that resistance point. Let's see how she does tomorrow. Have a great night.